how markets react to war. And today I want to talk about the initial reaction that we've seen across several major markets amid the developing story of the Israeli government declaring war on Hamas on Sunday. And, of course, you could start with one of the most direct places, one of the most direct assets that a news story like this might affect, and that's the Israeli shekel here you see against the US dollar. And some really interesting price action there. We will get into that in a little bit, but just lets you know how big a wave a story like this can make across every asset class. This isn't the type of event where it's, it affects just some Israeli public companies and the stock market. No, it's you've got here dollar versus Israeli shekel. The dollar versus every currency was moving around like crazy here today off of this news. And you can also take a look at the initial reactions on the open. Now, this is the net change from Friday's close to the first 15 minutes of Sunday's open here. And fear was a common theme, not just like we saw in that currency bit, but across stocks, interest rates, commodities there with gold and crude oil, and then individual stock names. You might say, well, they perform positively. How is that an indication of fear? Those are huge defense stocks there in General Dynamics and Lockheed Martin. And for a good portion of the last 24 hours, some of the only stocks that were projected to perform positively here today is the S&P opened up down around a percentage point, notes down, up in price around a percentage point, which is a big move. Devotees of stock and bond trading will note that Treasury price action is usually, between a quarter and a half that of the stock market. And you saw, the 10-year up almost a whole percentage point on the open, down in yield about 12 basis points, which is a very significant move. And this wasn't, like I say, even a full day. This was just Friday's close to Sunday night's open. Gold also up a percentage point, as you might imagine, as the flight to quality poured into that market as well. Crude oil higher, and you might say, well, Frank, that's a risk-on asset. Why is that market higher if there's fear pouring into the market? Well, the fear is in the Middle East, and whenever you have war in a region that is also a huge producer of a commodity, you're likely to get some price increase because of the potential for lesser supply of that commodity. So crude oil jumps about 3% on the open as well. And then checking in midday to see how everything developed, how markets digested this declaration of war and assessed it with greater volume. Because that Sunday night open, it can be, even though you'd imagine most people who aren't usually watching and trading the open are actually tuned in, given the events of the weekend, it's still relatively low volume. So what was going on midday here in the U.S. session when you've already seen Asia, Europe, and half of the U.S. session digest this news? Well, the stock market fought all the way back to the middle of the day and actually closed higher on the day. But aside from that, not much else changed. The defense stocks performed actually even better if you want to correlate fear increasing with defense stocks appreciating in price. Well, fear escalated there. Same with crude oil, climbed by another 0.5% throughout the day. And treasuries held that move, and at various points in the day, built on top of that move. They didn't really reverse that at all. They're in treasuries, historical flight to quality, and gold as well. Gold actually by the close had appreciated another 0.5 percentage point as well. Midday, it had just held on to that move. And so what you're seeing here is most markets having the initial knee-jerk reaction of, oh, okay, fear is pouring into the markets, risk off action, and then almost everything aside from U.S. stocks continuing that trend. And so I wanted to take a look at some of the longer-term potential trends given the last time we saw an instance like this, which was, of course, there's been conflict in that part of the world for, the last 100 years, if you want to talk the modern conflict between Palestine and Israel. But going back to the last few years, from what I could find was the most common occurrence to this one was the 2014 Gaza War. And part of what helped me find this correlation between then and now is also this is the last time that we saw Israeli shekel prices this low was 2014, 15, 16 range. And there in 2014 and 2015, you actually saw this market above 4, which it hasn't been since the start of 2016. So a really long time that we haven't seen dollar appreciate to highs and the Israeli shekel fall to those lows. But I want to take a look as a little bit of a case study to see what happened to these other markets that we've been looking at, the flights to quality like gold and bonds, and the more risk on assets like stocks and crude oil that in this instance is kind of a little bit of both. So what happened in late 2014 and the start of 2015 amid this 2014 Gaza war? Now, of course, it might take a while for your eyes to fully grasp what's going on here. It's a bit of a mess because it's 4 charts. In black, you have the S&P. Red, you have the 10-year note price. In gold, you have the gold price. And in gray, you have crude oil. But also, it's a bit of a mess because there wasn't really any sustained trend, especially if you even zero in on the first quarter to half of the chart as this war broke out in July of 2014. So the first part there, and it did, only last about a month and a half, 2 months. But of course, as we would maybe expect to see from this current run of geopolitical strife, a lot of the lingering effects had existed for months to follow. But if you zero in on that, you can see at various points some pops in the gold and 10-year price and coinciding with some sell-offs in the S&P 500. Crude oil, I don't know what technically was going on during this period. Maybe there was a prevailing crude oil story that had nothing to do with the 2014 Gaza war, but crude oil did not see any kind of escalation in price like we've seen recently. Maybe the supply dynamics were more U.S. focused at that time. I don't know. But yeah, you can see, for example, in the first part of that chart, gold and 10 years rising as the S&P 500 is selling off. But even those moves look to be pretty short-lived. They look to last a couple of days to maybe a week or two at most throughout these different periods. Now, does that require that the movement that we're seeing in the current war between Israel and Hamas, does it have to all be short-lived? No, of course, anything can happen. This war can last longer than past ones. Trends can all be different. But what we have seen is, one, I guess this war in 2014 didn't last super long. And then two, the really lacking to find sustained reactions in some of these markets. And the U.S. stock piece being the least correlated of what we've seen in this most recent instance, as that was one of the only markets that really reversed that initial reaction. But then also historically, as we just saw, very little trend that could be seen aside from some short-term sell-offs and then bounces back in the stock market at that time. And of course, we're looking at, in this instance, the S&P 500 U.S. stocks, and the direct effect from war in the Middle East on the U.S. economy can be relatively minimal. You look at the U.S. GDP and the fact that in most recent readings, about 11% coming from exports, and only 3.5% of that coming from exports to the Middle East. Now, that's grown over the course of the past several years, but that's still a very small direct effect. Now, of course, this effect can be much larger depending on the U.S.'s involvement in this war and a number of other things. But yeah, hard to find historical basis for some sustained trends around events like this. And then also, given the current state of the U.S. economy, and also a bunch of different stories that are occurring domestically between inflation, interest rates, and everything else. Yeah, it'll be really interesting to see what new trends develop around this story.